Good. We go.
Interesting.
Okay, I'd just like to welcome everyone to the Environment South and Investment Subcommittee. My name is Andrew Morrison. I'm the new independent chair. Ko taka te mata waka, ko hoka nui te manga, ko matara te awa, ko ngā iwi, ko hui rapa te hapu, ko Puketeraki te marae, ko Andrew Morrison hau. So look, I'm very proud to be here and thank you for the appointment. And as I say, just coming into this, I want to commend Environment Southland for setting this committee up, using the disciplines, process and transparency in making the decision for their ratepayers. Ratepayers always sit front and centre of all these decisions, and so just the process and the disciplines. Are you happy if we go in there and introduce everyone? Just for those online, just want to acknowledge people online watching this.
I'm Thea Gibson. I'm the Acting General Manager that supports this committee.
Cassandra Crowley. I'm the second independent member that's been appointed to this committee and would endorse the chair's comments around the process. I'm based in Rotorua and I'm also a director on the South Pole.
I'm Jeremy McPhail, Deputy Chair of the Council here.
Alistair Gibson, first term councillor, in the wrong place again, but let's not worry.
Tanya Hawkins, Chief Financial Officer.
And Tracy Adendorf, Team Medical Finance Operations.
Scott Hamilton, Strategic Advisor to Council on matters in relation to investments and establishment of this committee.
Eric Roy, third term councillor, ward member in Invercargill. The previous interim chair, before we divested the responsibilities to our new esteemed chair, Andrew. So, happy to be a councillor and on this committee. I think this is pretty exciting times.
I'm Marie Halnice, Executive Assistant to the Corporate Services General Manager and in committee support in the Investment Committee.
Okay, well, thank you, everyone. As I say, I want to acknowledge the process that you went through in creating this, the independent positions and the disciplines that council are going to use. Because there's a lot of councils looking at these processes in a volatile world around investments and active decision making in the best interest of ratepayers. Okay, so moving to the agenda, do we have any apologies today?
Councillor Rodway.
Councillor Rodway. Okay, we accept that apology. Declaration of interests.
I'll move the
You'll move. Apologies.
Accept it.
Sorry, Councillor Rodway is on approved leave.
Oh, right, okay.
Second.
Moved Councillor Roy, seconded Councillor McPhail. All those in favour?
Aye.
Thank you. Declaration of interests. We have an interest register.
We don't have an interest register, but
I think we probably need to construct an interest register, and I would like to note a standing interest for this committee of my role as a director of Southport New Zealand Limited.
Thank you. Thank you. And so with that guidance, Cassandra, we will construct an interest register and have all that listed for public transparency. Excellent. Okay, we'll acknowledge that today. Okay, the public forum, petitions, deputations.
we don't have any.
Nothing to do today. Confirmation of the minutes from the meeting on the 25th of February.
Yeah, I'm happy to move those and they'll be taken as read.
Move Councillor Roy, second Councillor McPhail. All those in favour?
Aye.
Okay. Any notifications of urgent, extraordinary or urgent business?
I haven't received any.
Nothing received. Okay, questions going into the next session of this meeting?
I have not received any questions.
Okay, then we will just move into the chairman and council reports, if people are comfortable with that. As this is my first meeting, I have no chairman's report, so I will just move on.
I don't think any of us do.
I'm not expecting any for today.
Okay. Okay, if that is the case, then we will move into the reports, 9.1, the investment report update.
Got Tracy and Tanya here. One of them will take the lead, I'm not sure which one, and then I will take any questions.
Thank you, Chair and committee. So the agenda has been sent out and I trust that you've had the opportunity to browse through it. I'll take you through the highlights. I'm not going to share this on the screen. I think it's easier perhaps if you just follow, listen, and you can check with me and ask questions as I talk through the report. So page 11, the investment report, managed funds. I draw your attention as a new committee to the summary on page 11. It says the council holds a portfolio of managed funds to maintain the buying power of its accumulated funds, which are held for future spending. And council speak that is reserves that we are maintaining. Income is generated from the managed fund and is based on movements in the portfolios, etc. The realised income is used to reduce the general rate. Unrealised income stays in the managed fund to build the council's capital investment and resilience. Now, I read that last month when the portfolio was at its near peak and we'd had a substantial increase in the market value of the portfolio. I read it again because that has changed. And as you go along, we'll learn that we do not budget much at all for those volatile changes in capital value for good reason. As it says here, the March quarter started well. It increased and reached a peak of 34.5 million at the end of January, decreasing from that point. Today, the market value of the same portfolio is 32.2 million. So not much change in those early few days of uncertainty in the US, but a steady decline. Right, we'll go through the key parts of this report is looking at the actuals achieved in terms of the portfolio, where our portfolio sits against its benchmarks, aka how well are we doing compared to other people in other portfolios in the same industry, how well are we doing compared to our objectives in the LTP, and are we meeting, is the portfolio set up as per our agreed objectives? Page 12, the table on page 12 outlines largely exactly where we're invested. It's a summary, and I think each 6 months you will receive from us a detailed report of actual underlying investments. So at the end of March 2025, we had 33.3, round numbers, $33.4 million in the portfolio, $6.886 million surplus cash in the bank. That is attracting, that's an interest earning account. And you will see as you go through, members, that we have quite a cyclical cash flow. So from October through to April, we're in funds. Not so much in funds for the winter months. Obviously, as I've just said, 33.34 with 84 is the March balance, and today it is 32. So a reduction of $1 million since that point. We note here that from June last year through to December that the fund manager, JB Ware, were realigning our portfolio. So at June, we had a 50-50 portfolio, 50% equities, 50% debt. By December, we were 60-40, reflecting our new SIPO that was put in place. Considering the volatility that has occurred, the whiplashing of values in the last 3 weeks, we are still sitting at a 60-40 portfolio. So there was some adjustment by JB Ware in the last days of March, a rebalancing, which they refer to in their report at the back. They call it a tactical realignment. Page 13 is a really interesting graph, and it's one we continue to keep in the report. The benefit of those online is, if you see page 13, those red lines are showing us the movement in the capital value of the portfolio. Quite volatile when those across the 12 months. Very large increase in July and a very large decrease in March. Pages 14, simply talking about the benchmarks. So again, how is this portfolio doing compared to our competitors in the same industry, how is our manager doing with our portfolio? So we're reporting again slightly ahead of benchmark, 7.81% for the rolling 12 months, so March to March. Just to be clear about that, because often we talk here annual and then sometimes year to date. That one is a March to March balance. So yeah, staying ahead of the benchmark, and then further down in the table, page 14, years 1, 3, and 5, all showing positives for the portfolio manager ahead of the equivalent benchmarks. Page 15, Chair, is two tables comparing the return or the investment against what we expected, what council planned in the long-term plan. So the council planned a gross return of 5.5% at 31st of March for the 9 months. You can see there that it's 7.1%, and clearly that has been impacted just in the few weeks since that date. For your, just to note, we have split our income, if you like, technical word income, into capital gains and realisable income. So the capital gain budgeted for the 12 months was 843,000, and that gross income to be received into the portfolio, 830,000. The reason we do that, and we continue to focus on that, is that the realised income, we're budgeting for around 3%. We're clearly on target to do that. That 3% is the funding that we use to reduce the rates of the ratepayer. The value gain and loss in the portfolio is budgeted for a small amount relative to the value of the portfolio. 800,000 is not a lot over a period of time, but that's the long-term average that we hope to achieve, and that funding that amount will be put aside and added to the reserves, inflation-proofing them and building the value of the reserves. Summary then, we're on target. Well, we were on target at 31st of March. We could well still be on target by the 30th of June. We will see when that comes. The next table, Chair, in the middle of that, page 15, talks about the total value of the portfolio and how we budget, how we forecast for that. We had an opening balance of 30.2 million, and we had forecast a closing of 31.68 million. The actual opening was 31.3. The difference between the two was the movement in the value of the shares between February and June. So there was actually $1 million change from when we set our budget to the beginning of the financial year. So it's quite a significant change starting back in February last year. I think I could keep going, Chair, but is there any questions at this point?
No, the very next paragraph is quite pertinent though, isn't it? Your 5-year results.
Yes.
Which actually give an insight into the sense of the achievement. Yeah. Sorry, Scott, question?
Can I just maybe just set a little bit of scene, which is a bit higher than what this report is, in the sense that what Tanya has presented is the quarterly outcome, and it is a volatile period. And we'll cover this a little bit through the induction process as well, but the SIPO has set effectively a targeted minimum of 5.5, which doesn't sound very aspirational, and it's not. But that's made up of two parts. One is we want to try and get 3% out of this reserve portfolio, out of this portfolio that goes up to help the council to support the rates. So there's a 3% cash withdrawal that comes out of it every year. This is also ratepayer reserves. And so the other 2.5% is basically retained there as a notional inflation, so that the buying power of the money that has been collected from the ratepayers in the past, which is invested, is retained. The aspiration that we have set for JB Were and the portfolio is to achieve more than a 5.5%, but that residual is resilience or an allowance for volatility or an allowance for all those other bits and pieces. So there's not really a 5.5% target. You've got to do damn sight better than 5.5%. But it's kind of made up of those three components. The last component, the level of resilience that we actually get, or volatility, we can't control. But we have to control the first couple, because that's about looking after the reserves and it's about feeding the family. And so just to kind of put that context over the top, I think is important. And I think as Tanya has alluded to, the performance that you've seen there on a 1 and a 3 and a 5 year basis against what they're actually investing into looks okay. Is probably the best way to describe it.
Councillor McPhail.
If I can add to that, it's through a wee bit of history in regards to, I know even about 9 years ago when we came on, we were saying, oh, we shouldn't be risking these reserves because they're important to the community. And we actually, I think, altered it down, and now we've altered it back up, feeling a bit more confident about what we actually need them for. But maybe in time, there are reserves, and there are reserves for disaster, for the flood banks and things like that. But there are reserves that in the lease land that's actually just income. And that, you actually say, well, could you actually challenge that and really push that harder, because it's not specifically there. It's actually for the community, just cash in theory. So, we haven't really delved into the makeup of some of those reserves. I believe we could probably sort of challenge things a wee bit more, but overall it could be an average, but it's specific reserves. And the release land reserves is probably close to 25%, 25% of our investments. So it is a big chunk, and it's not specifically there for anything apart from just money to be used, not for disasters, for specific things that are needed. So I'm just putting it at some stage. Good to look at that.
Any other comments?
Just as you note, Chair, that at this point we had a 5-year average of 8.3%. Page 16 is for you to be confident that the manager is managing within the agreement mandate that they have with us. So the table, or the graph, at the top of page 16 with the bars, the cross line is the midpoint of that range. So for each of the component parts of the portfolio, that the manager has a mandate to work within a percentage range, and that percentage range is actually in detail on page 12, but shown much more easily here on page 16. So in most situations here, they're sitting on the midpoint, except in the text you will see they're slightly overweight in New Zealand equities and underweight in bonds. So that means in English is that they're at on the higher side of average for the investment in New Zealand equities and just under in New Zealand bonds. Now that's a tactical allocation by themselves, and when they visit, and they will report to this council twice a year, they will talk to us about those decisions. Needless to say, what's important to us is that they are compliant with the mandate and are working within the mandate, and as they've proven, continue to achieve above benchmark. There is quite a bit of commentary, Chair, attached from JB Ware, if you're interested in the detail of the market, individual components of the market and their investment. But other than that, I'll conclude the presentation of that report.
Any other questions, comments around the report? Scott?
Let's make one more. One of the other pieces, and it's not evidenced in this report for this year because it hasn't happened, but council through its long-term plan process will occasionally make decisions to utilise or invest some of those reserves for the purpose that the reserve is actually there for. In other words, take a capital withdrawal out of the portfolio. So the idea is that that is reflected against the portfolio that we have with the investment manager. So that we're always looking to try and make sure that we have assets to back the reserves, or if council deems it appropriate to spend those assets, then great. Or conversely, if council collects revenue out of ratepayers that isn't spent in a year, it's added to the asset so that that can take place. So obviously through the long-term plan, through the annual plan process, there is that feedback or that engagement that has to come through to reflect this portfolio, and the portfolio is rebalanced. Portfolio, the SIPO effectively is reviewed annually, because if there is significant expectation of draw on funds, then you change your risk profile because you believe that some of those proceeds are going to be needed in the near future. So that's an annual review that this committee will need to do, and be conscious and cognizant of what is coming out of that annual plan and long-term plan process.
As a new chair, that's really good, Scott, because you've explained the strategic investment portfolio objectives. You broke it into those three categories, and then Tahi, you said that you've currently rebalanced from a 50-50 income growth to a 60-40 around strategic asset allocation. Is it of value for those people watching the live stream to just talk about the reasons for that?
Well, Scott has addressed some of them. Within the portfolio, we have assets, reserves that are not, we don't believe will be used in the immediate term. And Councillor McPhail referred to some of those reserves. So actually on our behalf, Scott went through those reserves for us during the long-term plan, and we allocated them to short-term, medium-term and longer-term potentials. And it became clear then that we had the potential to slightly weight it more to the revenue side, because we had a longer dated assets, if you like, that weren't going to be drawn down immediately. So we need to have cash to fund those disaster reserves, but there are some longer assets in there. So it was with that in mind in the council's review during the long-term plan that we, and the advice of JP Weir, that showed us the positioning and relative risk to return, and the council decided that they could move to a 60-40 and just slightly increase the risk and slightly increase the return. But over the very long term, like people's KiwiSavers, if they're watching, the balance moving just to the left or right of the balance does make a difference to the ratepayers. And so that's where we're at. And the above risk return, I think if you've calculated, Scott, is that we're at 1%?
Yeah, well, the move from 50-50 to 60-40 probably gives you about 80 points of average difference, over time. If you look at KiwiSaver and other things, moving that a little bit further up. And basically, as Tanya said, we went through the reserves that were there. We looked at what was the likelihood of them getting called, what do we know through the long-term plan in terms of when we were forecasting to use some of those reserves, and what is our ability to effectively then invest with confidence in a duration. The other thing that probably sits across the top of your portfolio, because it's not a large portfolio, $30 million to us as individuals is a large portfolio, but in the context of investment, it's not. Liquidity is also important. So inside this portfolio as it stands, there isn't things like private equity and other bits and pieces today, partly because what we're investing at the moment is basically ratepayers' reserves, which council might determine to spend. You don't necessarily want to have that in assets which you can't liquidate for 10 years. So there's it is just looking at that blend. If, and we've got the discussion later, but if you went into a sale or sell down of part of Southport, and that was a long dated intergenerational thing, that might have a different profile in terms of how you invest.
Can I go to Councillor McPhail first? Do you have a question?
Yeah, just in regard to another point. We've obviously there are, as I say, individual reserves. We've probably got a lot more better information around the disaster reserves, how much we actually need to hold and things like that too. It's a broader discussion, especially after we've got insurance and trying to balance it. And we've had a major flood. We've got that data now. So there's always a challenge of saying, well, how much are we actually meant to hold of the community's money too? because we're waiting for it. But my question, I was just going to add, it'd be actually quite good to go back 5 years and just see what, I know that I've seen bar graphs in the past where as the portfolio's got the reductions for everyone to see how this has actually been quite important to the council in regards. There's been some big drawdowns and that when things are going really well, but also gives a better, instead of just a 1 year view where it's really highly volatile at the moment, just to look back and see that it's hugely important for the council to have this running pretty sweet too.
So that's an action you'd like
Yeah,
to.
I just,
Yep.
when you look at the year, but it's actually quite interesting. And the returns have been quite good in times, and it's been, it goes up and down, as share markets do, but just gives a feel for when the drawdowns are happening and things like that too.
On to a different track. Have we had communication from JB Ware about what their approach to the uncertainties around trade and the implications, and how they wait and see? Are they going to be reactive, or have they talked to us about anything in relation to the uncertainties that exist?
So the commentary, councillor, is actually very recent and it's written into to the back of the report. They've got a very much, proactive, and in the end of March, as this approached, I saw quite a lot of trades going through where they were rebalancing and tilting, changing what they were buying. So they're reasonably defensive in their choice of shares, and I think that has actually been reflected in the fact that while the US market is down in some places 10+% and in others 20%, our portfolio is down from peak 7%. And I'm very interested in the commentary out of the US about the bond market, and you may not have been following that, and it's been credited as being the one market that has altered Mr. Trump's thinking. But the value of our bonds have not moved. I'm just checking again this morning, and that is very good. That's reflective of good buying on a good placement on behalf of our manager, that we're not being affected by that volatility that the US, particularly treasuries, are seeing, where other countries are choosing to take some, whether they have to actually make up for the equity purchases, or whether they're choosing to strategically move money out of the US bond market. We're not being affected by that, and that is really reassuring that our portfolio is quite resilient. We have seen in the past international, it was only two and a half years ago, the exact same thing happened. The share market went down and the bond market went together. That should not happen. They should go in opposite directions. We did have a reduction in the portfolio value at that time, but we haven't seen it this time in our bond value, bonds that we're invested in here. So, technically, I think our manager's doing well, and like everybody else, we're waiting to see what happens.
Scott?
If I can just add a little bit to that. Again, come back to the nature and the purpose of what we have here. This is a longer term investment portfolio, trying to get longer term returns. Your SIPO that you have is not about winning every day.
Oh, yeah.
It's about getting a long-term investment return over time, and your manager hopefully therefore is focused on picking long, good-term companies to invest into, safe bonds to invest into, and that type of stuff. So, you're not, your portfolio isn't full of what they call long shorts and those types of things, where you're basically trying to guess which way the market's going to go today or tomorrow to make the quick buck and then get out. You're in much more long-term kind of conservative portfolio, which is much more fitting for the type of organisation that you are.
Cool.
Any other questions? Okay, we will formally receive the report.
Move that.
Yep.
I'll second.
You'll move, Councillor McPhail, you'll second, Councillor Roy. And we've got one action out of that. Was it, you've recorded it, Tony?
Yes, I have.
Yep, cool, excellent. Thank you, Tanya, thank you, Tracy, for that. Okay, now we move on to agenda item 9.2, Southport investment update.
Thank you, Chair. So this report is simply a summary of what is happening with our our single largest investment. Half the community has shares in Southport. Just noting the movement in the value of the shares, which is again quite not unusual. Council had a market value, the market value of investment currently is $104 million, and that was $97 million at 30th of June. But you'll note here that it's actually recorded in our balance sheet at cost of $8.7 million. And while it says here we recently had a peak of $6.37, that's a very recent peak, because you might remember a couple of years ago that was quite a bit higher. However, we don't, as I said, we do not reflect the change in market value through the accounts of Environment Southland. So we're not, unlike perhaps our neighbour up the road, where our accounts are thrown around quite a lot by the change in valuation of those big assets. Our reporting to our ratepayers rather is much simpler. So we're also just noting for the committee what is happening with other ports around New Zealand, some listed there, Napier, Pureterra, noting the councillors, Royal Company, noting the directors and any announcements. And of particular note, with satisfaction, is the interim report. So we noted this in the last meeting, but we've only just been announced in the last few days. So we've received the full interim report from Southport, and some very good results there, as was announced by the CE at the time. Particularly satisfying to see some volumes coming back up, and with that directly income, which is of course pointing out what we know, that this is a volume-based business largely with fixed overheads, fixed costs. And when that volume increases, it's to the benefit of the company and the shareholders. We have received our dividend of 7.5 cents. Thank you. And again, we receive a very important dividend to this council in March and October. And there's a note there, you see about the appointment of an intern director, which is again continuing a very good scheme that's been put in place in Southport, and I know also in Port Otago and other councils, other council-owned ports. I'm not going to go through the financials, Chair, but I was interested, and I think it's also valuable to point out on page 32 of the financial statement of Southport that the company is continuing to pay down its debt over. So Southport had very low debt historically, and has invested recently in the last few years actually in upgrading infrastructure and a new infrastructure, and particularly in deepening the entrance to the port. So at December last year, December 23, on page 32, if you're following, non-current liabilities or loans and borrowings was 43.5 million, partway down the page in the middle there. At June 24, that debt was 35.7 million, and it's just increased slightly again to December. So there's obviously a seasonal impact there. But the company is using its cash flows to reduce their debt, which is, of course, what they've already planned, but it's always reassuring, as I say, given that it was a company with very low debt relative to its quite substantial assets. So there's nothing particularly else that I'd like to point out in that report to you, unless there's some questions.
Any questions, subcommittee? Sandra, nothing you would like to add?
Obviously, I've already noted my conflict on this matter,
I think the comments that have been made from our CFO are accurate. And I think there's some interesting things to discuss later in the agenda.
Thank you.
I'll move the report.
You move the report, Councillor Roy.
Oh,
Oh, sorry.
I'll second it, but I was just going to make a comment, and sitting as an environment Southland councillor, it's quite interesting to see the increase in fertiliser and stock food, and I'm nothing against it, but it's the discussions of intensity of farming and things like that. It's quite an interesting position to be. We own a future of the company that's providing intensity. It's like this is business, and it's good to see, but it's actually, you think, how does this work? Because it's so reliant on agriculture to do well, especially when you see Tiwai come down, but there's obviously issues in dealing with fresh water, the quality and things. We're probably, how should I say, enhancing that to carry on a wee bit, but it's certainly an interesting balance when we're talking about their job as councillors. But no, it's good to see that from a profitability, it's taken away pretty good.
Just
sorry.
just a general comment on the back of that. One of the pieces that is changing in the investment landscape is the level of responsible investment. And responsible investment is moving to a much more principles-based approach in terms of how do you determine what is a good investment and what is not. Probably 10 years ago, responsible investment was, if it's bad, we say no. And it was all about exclusions. And I think there is a lot of entities like councils where they're sitting there looking at parts of their portfolio where they've got a port, or they've got, sitting there and saying no to alcohol, but actually you're in a region that promotes wine is difficult. There's actually, so you move much more, it's moving up a level to being about principles and actually being about active in the way that we manage what we invest into, to try and promote those right environmental, social, governance type standards, and less being about the thou shalt not. And that's just a change in the way that the whole investment universe is moving at the moment.
Yeah, well, on that point, I did note the climate disclosure just call out in the Southport reporting, which is obviously, when those questions are asked, as long as there's disclosures and processes, that is the start of the journey. So I want to acknowledge that and call that out. Any other questions? No, you've moved.
No, I'll move.
You've seconded. All those in favour?
Aye.
Thank you. Okay, down to item number 10, extraordinary urgent business. Nothing. Okay. We move into public excluded business now. Is that correct?
Marty, all explain reasons?
Yes, we are discussing the confirmation of the public excluded investment committee meetings held on 25th of February. Item 1, preparing for share sell down decision, and the second item is proposed work program. The reasons for moving into public excluded would be to prevent disclosure or use of official information for improper gain or disadvantage or advantage, to enable any local authority holding the information to carry out without prejudice and disadvantage commercial activities.
Thank you.
So you need to move that.
I'll move.
You'll move. Second, Councillor Crowley.
Yeah.
Member. So
You can be a
that
councillor.
forgive me on my first
We'll leave space for you.
Yeah. Okay, second that. All those in favour?
Aye.
Thank you.
We'll just wait for Marty to confirm that.
Put us offline.